some analysis. Here's Julia Lee from Bell Direct. Julia, thanks so much for joining us on this Monday afternoon. Really, we didn't have much hope following that pretty negative lead-in from Wall Street.
Nadine, if traders were trying to find any relief on today's market, it would have been quite difficult. If I bring up a market map, this is what the market looked like, and you can see it was pretty much red across the board. In fact, if we have a look at the top 200 stocks, we actually only saw 15 stocks which managed to gain ground today. The worst sectors today were information technology as well as the industrial sectors, which showed heavy falls. But we did see defensives relatively outperforming, but altogether a pretty bad day for the Australian share market. We've now seen 5 out of the last 6 sessions lower. Of course, all of this was on the back of a tumble on Wall Street on Friday, where we did see the Dow losing the most in terms of points in 6 months with a loss of 2.5%. We saw investors becoming a little bit nervous, and I guess what investors really are looking for is some solid data to support the recovery story. We had some consumer confidence numbers, but they were in line with expectations, but still the weakest since we've seen since 2008 or the end of 2008. So that really didn't lend the market much confidence at all. If we have a look at technicals on the market, this is the Australian share market, the ASX 200 index with the 100-day moving average across it. And what I want to point out is the last time we really saw a pullback was in June or July, and we came back to that 100-day moving average line. So if we have a look at where the 100-day moving average line is at the moment, it's at 4,355 points. So that should act as support for the Australian share market.
So Julia, I'm really curious to get your perspective on this Myer debut, because it was weak overall, but really what can you expect when CEO Bernie Brooks came out today and said that he's expecting the Christmas period to be good but not great? I mean, it couldn't have given much support to the debut.
Certainly doesn't help when a stock is debuting, and some comments from the CEO, they're being translated as not too positive. Now, for the Christmas season, they are expecting to see 3% growth compared to last year, and the CEO, they're saying that it's a good result, not a great result, and the market really didn't like the sound of that, and we saw Myer shares being heavily sold down. In fact, if we have a look at Myer and the IPO, it's the biggest initial public offering that we've seen since the global financial crisis, so in the last couple of years, and it's being watched very closely. Of course, we saw private equity buy the company around about 3 years ago at $1.4 billion. Now, this IPO values the company at $2.4 billion, and with the share price falling 8.5% from the IPO price on the debut, that takes the market capitalization of the company down to $2.2 billion. So all in all, a pretty disappointing result for investors who would have been hoping for some stag profits, and that's when on day one you do see a big rise in the share price and sell out. Unfortunately, we didn't see that. I guess what investors have gotten used to is a bit of discounting on the markets when it comes to capital raisings, especially new IPOs, and we didn't see that with Myer. It came on what the market saw was a premium. So on its first day, it was heavily sold off. If we have a look at the trading for the day for Myer, this is what it looks like. You can see they were sold down earlier on, but coming into the end of the session, they were sold down even more heavily. So the issue price was at $4.10, and if we have a look at where they ended the day, they ended at just $3.75. So not a good day for investors. Remember, this stock is also deferred settlement. So that means even if you sold the shares today, you actually wouldn't get access to your funds until the 16th of November. And if you buy the shares as well, you don't actually have to pay for them until the 16th of November as well.
Interesting story. Okay, Julia, one bright spot, Woodside Petroleum, at least there was one, and I'm assuming that it has to do with this sale to Origin Energy.
We saw oil prices tumbling 3.5% on Friday, and yet Woodside Petroleum did manage to buck the trend today and rise. It has to be said, though, in Asian trade, we did see oil prices start to rise back up again. And I guess the major influence on the oil prices this week is going to be some economic data coming out of the US. In particular, the market's going to be very closely watching the non-farm payroll numbers, which are out of the US on Friday night. In this type of environment where the market is plummeting, cash is king, and that's really what Woodside Petroleum delivered today. It said that it had about $712 million in its coffers after the sale of its 51.55% stake in its Otway natural gas project, and it sold that to Origin Energy. Now, what Woodside Petroleum is doing is selling off its non-core assets to concentrate on its core Western Australian portfolio. So in particular, we're looking at the Pluto project as well as the Browse project, and they're two very big projects that Woodside Petroleum is going to be concentrating on. So all in all, the market really liked the news of that. If we have a look at Woodside Petroleum's share price, this is in the past week, and you can see that last week was a pretty weak week for Woodside Petroleum because of the fall in oil price. But today we did see an uplift in its share price, up by 1.1% and bucking the trend of the overall market.
Julia, we'll leave it on that positive note. Thanks so much for your time this afternoon. We will catch up with you tomorrow.
Thanks, Nadine.